All right, welcome back, ladies and gentlemen. We're going to talk about RFK Jr., the way I've discussed market reform with him and his team, and a couple other new things, such as a new Gamestop patent, as well as talk about some short sellers. I'm going to wait for the stream to turn on here, make sure everyone can hear me okay. Let me get some feedback in the chat, guys. Let me know if this thing's on, and we will crank this out, make it a super short stream for you guys.
There's no point in saying good morning, because it certainly is not one.
Hi, Francine, Wolfie, Quant Trade, Caesar. Ladies and gentlemen, thank you for joining us. Fortunately, Pelosi doesn't feel the same as we do.
There's no point in saying good morning, because it certainly is not one.
I beg to differ. I think it's a great day for retail investors, holders of heavily shorted equities, precious metals, stocks, exchange traded funds. GameStop, AMC, DJT, silver, gold, and many other heavily shorted ETFs. John Doe and Felix, welcome back, my friends. Appreciate you as channel members. Hey, Vitali. As you can see, Pelosi is not happy right now, but earlier this year, Robert F. Kennedy Jr.'s campaign team reached out to me regarding stock market reform and manipulation. I gave them a long list of things that we can do to pass reforms, such as the Market Fairness Act and the Short Selling Transparency Act, which were shot down by the one and only Hester Pierce multiple times already, as well as a significant other number of things that can be done there. As you can see here, he did go ahead and tweet me here on this tweet that his team put out. You guys can see he did reach out to us before actually tweeting us, and I said it was more than okay for him to put down. He asked me if it was okay, if they thought it was all right that he invested $24,000 in GameStop, because he didn't want to disparage people in retail that had a smaller amount of money invested. And I told him, well, no, I've invested, six figures into these stocks and have actually showed my buys and sells publicly on mainstream media, both on YouTube and Twitter and others. And people really appreciated the transparency. And so they went ahead and put out this tweet saying, I'm very aware of what the average retail investor has been saying about the need for greater transparency in our markets, stronger regulatory oversight, and tougher penalties for market manipulation and criminal oversight. I'll reset that camera for you guys real quick. It seems to be stuck for whatever reason. He also said, Robert F. Kennedy Jr. said, my administration will support the ape retail rebellion and enact aggressive Wall Street reforms. To match action with words, I just invested $24,000 in GameStop from the fees I earned from suing Monsanto for their knowingly poisoning our soil and causing cancer. I love the idea of making Monsanto support GameStop and the apes. We need a free and fair market. Let's punish predatory short selling to the moon. By the way, I ride with you and I'm not leaving. This is the same thing we've heard from multiple CEOs now of that have been in the markets with us for a significant period of time, who have either foregone their salaries entirely or chosen to take salary cuts and receive their payment in the form of shares of stock of companies like GameStop, AMC, etc. So I was definitely proud to be a part of this conversation with these guys, and I'll read that for you here next if you guys want to know. But before we get there, let's talk about the news from RFK and the patent from GameStop as well. As you can see here, a few months ago, he came out and put out that tweet, which they showed it on places like Forbes and The Hill and many other major mainstream media news sources that I'm sure they were not happy about at all. There is no way that manipulators were happy about this stuff. We just found out that on November 7th, GameStop filed a patent. You can see it here. with Vantage Points with a new patent application via Gamestop with their address here in Grapevine, Texas, right down the street from me, in which they are requesting the registration of the trademark service mark identified in the United States Patent and Trademark Offices. Basically, we're looking at potentials for electronic cables, optical cables, basically different sorts of electrical cables, communications controllers in the nature of downloadable software for monitoring and controlling communications between computers and automated machine systems, keyboard controllers, etc., as well as controllers for game consoles in the nature of game controllers for computer games, electronic computer games, etc. So it definitely seems like they're doing some registering of trademarks and patents here with these different offices for different kinds of joysticks, controllers, potentially even joystick, playing card cases and holders and stuff that we have seen them come out with recently. But this is obviously some sort of a new product, as they have just filed this on November 7th. What's going on, Fugazi News? Sam Brown, Lady Kim, Tully, and Wolfie, thank you guys for being here. As you guys can see here, South Korea mulls fining Barclays and Citibank for short sale violations. Looks like Kristen Shaughnessy here posted that they are deliberately seeking to impose fines of up to $50 million on Barclays and about $8 million US on Citi. They are deliberately looking to fine them for 35 separate short selling violations last year, totaling 37 billion won, which is somewhere in the range of around 15 to 20 million US dollars. The previous record fine for that was 27 billion won on two subsidiaries of the former Credit Suisse group. And we know at this point that the subsidiaries here are very much so linked to Credit Suisse, potentially also Archegos and GameStop as well. So this is something that has been going on for an extended period of time, and this was just posted today. So this is a brand new article, brand new findings that are happening right now in South Korea. This is definitely something people should keep an eye on. And in regards to actual stock market reform, people are asking me, what did you say to RFK's team? So I'll read it to you briefly. They asked me questions about how they can discuss Blackrock and Vanguard with other people, because people were expressing concerns with the manipulation and the actual amount of money that are being held in these entities. So I told them that it needs to be made clear what their stance is on these companies in relation to the stranglehold on the money in businesses in our country. The stock market needs to be completely overhauled. And I gave them a few key ways. Basically, these self-regulatory organizations, these SROs, police themselves. And that's one of the biggest problems that we're currently seeing. They have way too much power. They need third-party oversight in order to prevent them from acting in their own company's best interests. So people on the board of FINRA and the DTCC are the same people that are on the board of Citadel and Robinhood and all these other brokers and market-making broker-dealers that are, unfortunately, naked short selling stock on behalf of their hedge funds and using market maker exemptions to do things that should not be used, as well as failing to deliver and all sorts of other non-legal forms of manipulation of markets. So basically, some of these companies like the NSCC, the DTC, FINRA, they need independent oversight by the SEC and the CFTC, the Department of Justice, and a third party. There needs to be enhanced transparency requirements, like public disclosures of detailed reports on the enforcement actions and decisions that are going on in places like FINRA and the DTC. Because right now, that's all hidden. The police investigate themselves and confirm that they've done nothing wrong. The conflicts of interest must be approved by third parties. Retail advocacy groups that can be created, independent experts that are not linked to these firms. CJ in the chat says the wrath of the apes is coming soon. And with the help of the RFK Jr. and his team, the Donald Trump administration, it is very much looking like that is exactly what's going to happen. The SROs and employees need to be banned from working for these firms. They need to be prevented for a minimum of 24 months switching between jobs and to disincentivize the moving from the private sector to the public sector and back in order to manipulate these regulations. I told RFK's team that the SEC is understaffed and underfunded. And while that may be hard to understand, the fact is that these hedge funds pay these attorneys and people that are former SEC staff millions and millions of dollars, giving them 1,000% pay raise, a 2,000% pay raise year over year, and massive bonuses. It's a revolving door from the Securities Exchange Commission and these other firms, which again, they oversee themselves, right? FINRA and DTCC, all these same cats from Fidelity and E-Trade and Robinhood and Citadel and Virtue are the same ones that police themselves via these firms. The SEC salaries can't compete with the hedge funds. They have to give them a raise and more incentive to do their jobs, give them better bonuses, vacation days, and other things that are creative, and prevent them from working for the private sector with significantly long cooling off periods. There has to be a public interest division created by RFK's team, by the Trump administration, to advocate for retail investors. And it needs to be run by a board member of retail investors like you and I, and should be overseen by third-party firms like these SROs with the ability to speak with the SEC and the DOJ directly to petition Congress and the Senate if they need to move things up the chain and make sure that these things are implemented properly. There needs to be reforms to create a more level playing field, such as revising the rules around high-frequency trading, dark pools, and payment for order flow. There has to be enhanced disclosure requirements for broker-dealers, short sellers, market-making broker-dealers, hedge funds, family offices, the whole 9 yards, all the way up to the prime brokerages and the clearinghouses. Hester Pierce shot down the Market Fairness Act. We need that back. Hester Pierce shot down the Short Selling Transparency Act, along with a lot of people in Congress. We need those back now that a Republican-led House and Senate can actually implement these reforms. We need to increase manpower and funding to the Consolidated Audit Trail system, the CAT system. There needs to be a position at the Department of Justice to work directly with the Securities Exchange Commission to track down and investigate market manipulation via the CAT system and other such tools with the sole purposes of cracking down on prosecuting repeat offenders. The Consolidated Audit Trail is like a trail of breadcrumbs that leaves a bloody fingerprint, a bloody handprint on every single share and every single order that is processed on the market now. This makes things a lot harder for participants to wash trade the same share over and over again, the same orders over and over again. And this is a great thing, but we need to have it actually overseen by people that know what they're doing and what they're looking for. We need harsher penalties for fraud and repeat offenses. And that's exactly what RFK said they were going to do in this post, in which we were lucky enough to be tweeted. You know, they asked us ahead of time. That's exactly what they're going to do. They're going to impose tougher penalties, increase transparency, and increase the oversight here with Wall Street. It has to happen. I told them, you need to remove the market maker's ability to legally sell shares of stock naked, meaning shares of stock that they don't fucking own. They can sell you something they don't own 1,000, 10,000, 1,000,000 times over. And then they don't even have to deliver it. They can fail to deliver. This creates synthetic shares. And these are very similar to phantom shares, but are different in the term of they're synthetic shares, shares printed out of thin air that don't actually exist. But if you're holding them, when you go to sell, they need to still bring back all these synthetic shares to eliminate them out of the system. They also need to be purchased up. And they can sell these stocks naked without locating shares for the purposes of liquidity using the market maker Rule 203 BI exemption. So, Paul Kenny, I agree with you. We need to ban naked shorting and ban all front running of these orders and trades. Fugazi says we need transparency, and people and corporations need to be made an example of. Terry brings up a great point in that we have 69 more days until Donald Trump gets into the presidency. And Wolfie is right. He has spoken about regulatory capture. We need to force market makers to deliver those shares within 24 hours. We need same-day settlements. Enough of letting these assholes internalize the trades, front run your trades, hold your orders up to a damn month, and actually force them to buy them back automatically if they don't do it. This needs to be enforced by a third-party regulator, the SEC, the CFTC, the DTCs. Whistleblowers need incentives and support and safety assistance. Freaking United States Secret Service at some point. And lastly, we need to educate people all around the world regarding financial literacy. We need programs in middle schools and high schools that will allow our students to understand the way the markets actually operate, how to buy and sell on financial markets, how to spot and notice when there is actual naked shorting occurring, when things are not properly being returned. And this will make all of retail investors as a whole smarter and less likely to be duped by guys like, well, look at the liquidity fairy, Doug Sifu. Look at the bedpost, Kenneth Cordell, bedpost Griffin. Look at the Ponzi schemes like Sam Bankman-Fried, like, what's his name, our Ponzi king here of 2008. All of these guys did something within the markets for a significant period of time legally before they started doing illegal things. Bernie Madoff, the Ponzi king up until recently, as he was dethroned by the one and only Sam Bankman-Fried. And to think that guys like his right-hand man, who currently is the head of Architect Phi, Brett, I can't remember that guy's last name, are actually still allowed to trade in the markets is, in my opinion, quite criminal. And a lot of people there with FTX should have lost their securities license, and even more of them should have gone to prison. Wolfie Andrew Left of Citron Research was caught by the Consolidated Audit Trail for naked shorting and manipulating markets against GameStop, AMC, Tesla, and many other stocks. He is facing 370 years in federal prison. And of course, we all know that Andrew Left of Citron Research is rolling over, because instead of going to trial earlier this year like he was supposed to, the trial was postponed because everyone who associated with Andrew Left to manipulate the markets is going to go down, because he's going to do everything he can to not rot away for the rest of his days in prison. All of these things need to be integrated into middle and high school curriculum and even adult college classes. Payment for order flow needs to be banned entirely. It is criminal. It is illegal in the United Kingdom. It is illegal in Canada. It is illegal in almost all of Europe and Asia and many other places, because it is crime. Your orders are being purchased by the market maker from Robinhood and Schwab and E-Trade and Webull and all of the other brokerages. Even Fidelity is selling your orders using payment for order flow to the highest bidder, the wholesaler, who can then internalize your trade. They can front run it. They can hold on to it for up to a month. And even worse, they can trade against you to make sure that you lose money and they make money. But don't worry, it's commission free. But remember, ladies and gentlemen, nothing in life is free. There's no free lunch, and there's no such thing as a commission free trade. You just pay so much in commissions baked into your purchase or sale order that you have no idea what you're even paying. It costs you more to buy through commission free trades than if you were to just pay a few pennies or a couple bucks up front and know that you were getting the best execution possible. We need these guys to lose their securities licenses if they are repeat offenders. We need these guys to go to prison because they don't deserve to be able to break the rules over and over and over again. High frequency trading needs to be severely overhauled, if not banned entirely. The reason that they exist aren't valid reasons to prevent stock prices from changing during a bulk order between two firms. Dark pools were supposed to allow two large firms to trade large amounts of stock between each other without affecting the stock price. How is that even fair? Why should you be able to buy 1 million shares from me without changing the stock price so that my short positions don't get negatively affected? How is that fair to anybody? It's not. It's criminal. Tokenized securities using cryptocurrencies needs to be made illegal entirely. And if they're going to be used, it needs to be made in a way where they can't be artificially created, like what happened with FTX and dozens of other cryptocurrency firms, which you guys have heard here on this channel already. And if you haven't, trust me, the videos are here. You can go find them on my channel or even on my Twitter at BossBlunts1. They cannot be used as share. They should not be able to be used as share locates or share borrows. And there needs to be massive fines punishable by jail time. There has to be maximum caps on the percentage ownership of a cryptocurrency by any one financial firm like Blackrock, Vanguard, etc., who, of course, now is the majority owner of Bitcoin. Bitcoin ETFs and other crypto ETFs are being created not to allow people to have more access to it, because anybody can buy crypto. They're being created to manipulate the price of the cryptocurrencies themselves. Period. There's no other reason for that to occur. And so a lot of people think that that would be very difficult to do, and it would, but it needs to happen. And there's a lot more that we can do as well, but this is a great start. If we could have all of these things done in the next 4 years, it would be a night and day difference on what we see now in the terms of the market manipulation and the price suppression that is currently occurring. And again, this is something that's happening every day. This article just came out on the Korea Economic Daily 2 hours ago, in which this is something that we continue to see. Naked shorting is prevalent all around the world. And if you guys are tired of it, go to litexchange.com, go to the link down in the description, and be a part of it. We are literally creating a stock and crypto broker dealer for you. And this is the first time in the history of the world that the 99% actually has a chance to own equity in the company. So far, 247 founding investors have invested over $400,000 in Lit Exchange. And we are giving you this opportunity, again, the first time in the history of the world that this has happened, so that you can own the company opposed to a hedge fund.
I want to be clear. I do not respect the SEC.
We made the decision in
Guys
the
like
morning
Robinhood
to limit the buying of about 13 securities.
Guys like Vlad Tenev of Robinhood, guys like Ken Griffin, who set the price of securities, are the problem in financial markets right now. And if you want to be a part of a company by owning equity shares in that company and receiving a plethora of other benefits that will allow you to use a brokerage that doesn't do that, Lit Exchange is the way to go. We are the first viable competitor in the history of the world to be able to challenge these guys simply by making orders trade on lit markets automatically. It's really that simple. And I don't worry about them doing it because they make so much fucking money, billions and billions of dollars, by trading your orders via payment for order flow in dark pools, that they will never fucking stop until it becomes illegal. And at that point, it'll be too late. Robinhood went from having 21 million users in 2021 to 11 million in only 18 months. They lost almost half of all their users because they prevented retail from buying or selling their stocks and locking in a significant portion of gains. Cheers, ladies and gentlemen. I wish you peace and wealth.